Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Sten with tonight's Deep Dive. It is March 26, 2019. We're going to be talking about Hogs today, the ETF being HOGS. And what we have is, obviously an uptrend for anybody that's trading it, but there's some warning signs, and that's what we're really going to be talking about here tonight. First, we got a technical rating, which is flat. It's basically starting to reverse course. We got the seasonals that are pointed down. We have an official rocket market, which we don't talk about all that frequently, solely because of the fact that it doesn't happen all that frequently, but it's important. And we're sitting on support, and that support may not hold. The other thing that's popping up here is we just recently had a surge high for profit taking, and we have right now an earthquake. That's what the EQ stands for, an earthquake high, and that always means that there has been an extreme amount of volatility one way or the other, and in this case to the upside. And when you get this type of a condition, it kind of shakes a lot of people out of the market and kind of tells you that something big is right now happening, and that it probably isn't going to last. And the best way to really express this is to really just kind of look at the market. So kind of small here because I'm going to show something here, but here is the surge to the upside here for lean hogs, and it's been a pretty dramatic one. We got here is the lows basically on the 25th and 26th, and the market has been rallying ever since then. We've had a lot of systems unwind their shorts and take full advantage of that particular move. Now, you might see this and say, wow, that's been a nice move. Maybe it's going to continue. Well, the reality is that back over here, we have some major resistance to the market. It just kind of depends upon where you stand with some of these levels. But this is where the support resistance levels are coming from, right through here, these three. And so the fact is that the market has had a nice rally. It's right now butting up against, it depends upon which one you're looking at, whether it's above or below it. But these three levels right through here really indicating that the market was going to become a little winded at this particular level, and that it's likely to either consolidate or it's going to sell off a little bit. But the one thing that it's telling us is that that surge to the upside has been very strong. And when we look, and I know it's kind of small down here, but this little magenta dot right here, that is what we're talking about for that that surge that we actually had in the market. And that particular surge is really telling us that that this is a rocket market, that the market is going to basically have had that major thrust, and it's going to come back down to earth. That's what the rocket represents. It's been surging, and we're anticipating that it's going to come back to earth. So that'll give you an idea as to what's taking place with the market itself. And with some of these conditions, it's obviously not a bad time to take heart and really kind of look at this market and decide whether or not you want to continue with it. When we look at the seasonal tendencies to the market, here is lean hogs is number 2 on the list. And when we actually look at the charts, what you'll see here is late March going into April, and we've had that nice surge. We would expect the market to sell off a little bit. There's going to be a continuation, at least according to the seasonal charts, but in the near term going into call it the first week or so of April, that a lot of nothing, potentially a little bit of a sell-off should occur. Now, what we have here are 3 lines. We've got a 5, a 10, and a 15-year chart, and you can see that it kind of follows suit with all of the years. Maybe it gets a little ahead of itself with the 5-year chart, which doesn't have as much information, but it still kind of shows a generic thrust to the market, no matter what time period you're looking at, the 5, the 10, or the 15. And so that being the case, there's been the thrust, and now we're kind of looking for the market to wane a little bit and maybe take a little bit of profit taking, which is the upshot of what it is that we're looking at here. I'll just kind of show this to you. So this is an old lean hog deep dive that I did back on February 26th, where there was a sub low that was in place. And since that time, and I'll just show this to you, here is the that it's hard to see it, but there's this dark blue line, that or dot right there. That was the sub low where the market had gone a little too far. The opposite of a sub low is a rocket high. So I point that out, that the fact is that we've done very well with what we were looking for as far as a reversal at that point, and that the market did in fact have that thrust, and now we're looking for, as a minimum, a consolidation. I use the seasonal charts as the emphasis, and perhaps have the market really just kind of sell off a little bit, get rid of some of this thrust that we've had, and then have another opportunity according to the seasonal charts for another move to the market. The systems right now, nice open position, just a 90-minute bar system. It's been long since the 25th. We had other systems at the time that have unwound themselves, but it has stuck with that trade the entire time. So we have a nice little open position profit per contract. So we're doing well on that side. And then the other thing I'll point out is when we look at correlation between a market, call it lean hogs, against other markets, I want you to take a serious look at this market, because the correlation sets up in such a way that it really should be added into a lot of portfolios. So you may not trade lean hogs, but you should at least honestly take a look at it. So when we look at the weekly correlation, here's lean hogs right down here. The higher it is on this list, or the smaller the number, the more stable the correlation is between the market, in this case lean hogs, and all of these other markets. There's a lot of volatility in certain markets, but with lean hogs there's actually stability, and that's what you're looking for, whether it's on a weekly bar or on a monthly bar. And lo and behold, it's at the top of the list on the monthlies. So this being the case, it legitimately is a good market. It's not the most liquid in comparison to the S&P or 10-year notes or crude, but it is certainly a market that has justification for it to be traded. It has a good grading, it's receptive to trading systems, and it really belongs in portfolios because the volatility between lean hogs, and all of these other markets on the list is very stable. And so it's got a stability factor to it that really warrants adding it into a quote-unquote trading portfolio. So that being the case, I just want to kind of make the point that we've got the analytics are telling us we're ahead of ourselves. The seasonals are telling us that we're ahead of ourselves, and we're probably going to go into at least as a minimum consolidation. The systems are still long as of right now, but it's a 90-minute bar system, so I do anticipate at least an unwinding of that position, but we have certainly been able to take advantage of that surge all the way through. And from that standpoint, not a bad opportunity to unwind a little more of the positions and live to trade another day. So with that, thanks very much. Oh, by the way, we'll be going to be doing a webinar tomorrow that you can sign up for, that will be talking about a lot of these analytics for the individual markets. So if you're so interested, tomorrow at 11 o'clock Eastern Standard Time, just simply go to our website, come down to memberships, upcoming webinars, and what you can do is you can still sign up for the deep dive analytic presentation I'll be doing tomorrow. So with that, thank you very much, and we will look at another market tomorrow. Bye-bye.